Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you guys how to make smarter trades. Today, I'm going to change things up. I decided to record this video before the market opens on Friday the 24th. So these are actually the alerts from yesterday. But the reason I want to do it today is because now that we're through when both of these companies, for Microsoft and Pandora, have announced earnings, I wanted to do this video this morning instead of last night so that we can now talk a little bit of strategy heading into today, right? And so sometimes we can't do that in the evening because we don't know what the earnings are going to be. So now we definitely know what earnings are going to be for Microsoft and Pandora, which are two earnings trades. So I want to talk a little bit of strategy heading into today, so that you guys have an idea of what we can do to adjust these trades. As always, it's very similar to what we did with Coca-Cola and what we've done with all the other earning trades that we have. When the market moves against one side, you're going to leave that side alone, but roll it out to the next month. That's the first step. And then move the other side, so the side that the market moved away from, you're going to move that side closer. Okay, and so we'll have an idea of how to actually do this today. Before we do that, I want to go over just our quick iron condor in EWZ. So EWZ is just nothing more than just kind of reloading the gun here and going back to a high implied volatility stock and resetting our boundaries. So we had an EWZ trade last month that we made adjustments to, and we're going to go ahead and just do it again, right? This is what probability trading is all about, is, continuing to make the same types of trades, high probability trades, so that over time those probabilities work themselves out. But it doesn't work unless you actually just continue to place these trades. So for those of you who thought it might be hard to get back into EWZ, I know I got a bunch of emails saying, Kirk, we had a losing trade on EWZ last time, but we've made some good money with EWZ this year. So it's time to get back into the game, kind of reload the gun here, and get into another iron condor. So for EWZ, we got into the 45.46 and the 36.35 put spread. So there's a really nice, almost $10 wide iron condor, and we took in a nice credit of 52 cents. Okay, so very, very good credit for a $1 wide iron condor in EWZ. So I'll go here to the chart of EWZ, and you can see it's obviously come back down, and implied volatility has come back down for sure. So we should have gotten into it a little bit sooner, but it still is up at the 62nd percentile. So implied volatility is still very, very high. And again, you can see with our strikes, we've got a nice wide base around that iron condor. So when I go to the actual, profit loss diagram here, you can see just how wide this iron condor is for EWZ. EWZ right now is trading right there at 40.33. So we've got good distance on either side. And on this trade, we're taking about the same amount of risk as our potential profit. So we could make about $200, we could lose about $200, but notice that we've got a very wide range that EWZ can trade in. So again, we're just forcing the market to make a big move in either direction, kind of outside of that one standard deviation area. Okay, so for the earnings trades, let's first cover Microsoft. So as always with both of these trades, even though you can't see it today because it's in the morning, you can go back to some of the videos that we've done before and see how we place these earnings trades, right? So how we actually go about, entering those spreads and what strikes we select. And of course, you can always sign up for the webinar that we have coming up next Tuesday, or this coming Tuesday, which is going to be all about earnings trades, but you get a little bit of a sneak peek here tonight with these trades. So with Microsoft, what we did is we did the 46.47 call spread and the 43.42 put spread. Now that was just outside of a one standard deviation move, and we were able to take in a 25-cent credit on those three iron condors. Now we did decide to do the weekly contracts because those weekly contracts had good volume. Microsoft is obviously a very big name stock. It's highly traded. So I don't think there's going to be any issue today being able to roll those contracts to November if we need to. Now we actually go to the chart here, and let me go back to the chart. And this is what our profit, MSFT, not MAFT. So this is what the chart of the iron condor looks like for Microsoft. So you can see Microsoft was trading right around here yesterday, and then today with earnings, currently this morning, it's trading right here. So it's just on the edge of that one standard deviation move, which is just incredible. So it did actually make and a nice move after earnings. It traded up. So now you can see it's starting to test the upper boundary of our iron condor, okay? So the first thing that we're going to do this morning, if Microsoft opens here and we have a little profit or a little gain, we might just close out the whole trade as a scratch. But if it does continue to open much more past our break-even point, the first thing that we're going to do is roll this side of the trade out to November. Okay, so this is our call spread. That is the 46.47. We're going to roll that out to November, but keep the exact same strikes. So you're not going to move these strikes at all. You're just going to roll it out to November, and that's going to give you more credit. And that credit is going to help move that break-even point out further. Okay, so that's the first thing that we're going to do. The second thing that we're going to do is we're going to take this side that's already profitable, and we're going to leave this side there. But for November, we're going to pull in this iron condor really, really close. So somewhere around 45, 44. Okay, so we're going to, you think about it as sliding this side closer to the market, right? The market's, it's not going to be down here anymore, right? So there's no risk of Microsoft going lower at this point. Now the risk is that it continues to go higher. So what we're going to do is we're going to slide this put spread closer to Microsoft. And again, that's going to allow us to take in a credit, which then helps move the break-even point out further. Again, trying to recenter this trade over Microsoft. Okay, so that's kind of the logistics of how you do it. When you actually go to your actual profit or your actual trading screen, what you're going to do is you're going to go here to the iron condor, and you right-click on this button right next to it, this little blue button, and you're going to go up to create a rolling order. Okay, so now what we're going to do is we're not going to roll the put side. Remember, what we're going to do is we're going to roll this call side. So you see here that we're going to roll, it says the Microsoft weeklies to, it's basically saying the next October monthlies, but we're going to actually change that. But it's the call side that we're rolling, the 46.47 to the 46.47. So we click this, and you can see here that it's just rolling it out to the next weekly contract, but you want to change that to the monthly, which is November. Okay, so right now we could roll that strategy, and again, the market's not trading, so these prices aren't, 100% accurate, but we'll probably be able to roll that strategy out to next month for a credit. So right now, based on whatever pricing is in here currently, we're able to roll that strategy from October weeklies out to the Novembers for a credit of around 11 cents. Okay, and that 11 cents is going to help move our break-even point out another 11 cents. And that's the whole idea, is, continuously move that break-even out. Okay, so that's Microsoft. So let's look at Pandora. So Pandora, again, very big name stock, lots of liquidity, no problem trading the weeklies because we have the monthlies that we can roll to. And so for Pandora, we decided to go with the 25.26 call spread and the 21.20 put spread below the market. Now Pandora is a little bit different. Pandora actually has made a move lower. So Pandora has actually made a move lower from where it was earlier yesterday. So Pandora was trading up around here yesterday, and you can see that as of right now, this morning, pre-market, it's trading around 21.82. Now this is actually fairly good for Pandora, so we probably won't have to make an adjustment in Pandora. We'll see how quickly these options decline in value because today is the last day for them. So we might focus on Microsoft first, since that's giving us a little bit more pain than Pandora, but you can see that it did move well within our standard deviation on either side for this market. So right now we should see a nice little profit in Pandora, but the same thing would apply. If Pandora does for some reason open up and just rush lower and a lot of selling on the open, then what we would do is we would keep this put spread the same. We would just roll it out to November, keeping the same strikes, and we would take this call spread above the market and we would slide it closer. Okay, so you'd slide that call spread closer and create a more tall or narrow iron condor, and then get rid of this position out here, which will expire today anyway. Okay, so that's kind of the strategy behind it, and I just wanted to go over that a little bit more. It's easier to do now that the market's open, so that's why I didn't send out a video last night. It's a little bit different, I know, and some people always freak out because they love getting the videos at night, which is cool, but this is a lot more helpful to understand now pre-market what your strategy should be heading into the trading day. So hopefully that was really helpful. And as always, if you guys have any comments or questions, please ask them right below, and happy trading.